Hello everyone, and welcome to this presentation of how to detect early trends in virtually any market and any time frame. Welcome, my name is Stephen Primo. I am the president and founder of Specialist Trading. And for those people who are new to joining my presentations, a little bit of background about Specialist Trading. We are first and foremost an educational company. Now, we provide all of our members and students with strategies and rules in which to trade those strategies. But we're really more about educating you so that you can empower yourself and empower your own trading. You see, it's our opinion that the reason why most traders lose is really just because they're giving their power away. They're letting someone else determine what they should trade, when they should get in, when they should get out. What we do is we provide you with the basic format, but then we give you a lot of room so that you can structure it to meet your needs and meet your particular style. And we work with you. It's more of a mentorship than anything else. Once again, my name is Stephen Primo. I've been trading for 37 years. I started my career on the floor of the Pacific Stock Exchange. I was on the floor for a total of 16 years, and 9 of those years I was a specialist for Donaldson, Lufkin, and Jenrette. So I've seen and traded just about everything and anything out there. I traded through the crash of '87 and the great bull market that ensued. I left the floor in the mid-90s to manage money, and ultimately I started Specialist Trading, where I just teach and mentor all of my students around the world and the globe. Our strategies and our courses are taught in countries in over 60 countries around the world, anywhere from hedge fund managers to people that have only been trading for a couple of weeks. So this promises to be a great presentation. I'm going to show you a great technique for trading with the trend and how to spot the trend before anyone else usually does. But as usual, I ask that you please take a moment to view our disclaimer. I'm going to show you some performance results using this particular entry technique, but please remember that we can in no way guarantee that any of the results I'm about to share with you will be revealed or will be repeated, I should say, in the future. So once again, please take a moment to view our disclaimer. And as you're doing that as well, I also want to invite each and every one of you to follow us and join us on Twitter. We post a lot of great free information there on a daily basis. In fact, just a couple of days ago, I posted a great buy signal in the markets. As you've seen, the market has made new highs and continue to go higher and higher, and we posted this a couple of days before we made those highs. So I'm going to show you actually that example later on in today's presentation. There's our handle right there, abbreviation at SPCLST. TRADG. As I said, we post on a daily basis, anywhere from daily wisdom in the trading markets to signals in the Forex, currency pairs, as well as stocks and E-minis. Okay, as I said in the very beginning, we are an educational company, and I just want to go a little bit more on the philosophy of this, because so many people today are relying either on chat rooms, trading rooms. They're relying on what some television guru is saying, telling them what to do or what to buy. They're relying on too much news impacting their decision process, and just a bunch of outside sources in order for them to determine what to do. And they're overcomplicating their trading in the process. And the reason I'm saying this is because this is the way I used to trade myself. So I know firsthand what this type of trading is like. The only problem is I traded this way for my first year or two as a specialist, and I couldn't make a dime. In fact, I basically was treading water for the first year or two in the business. So I know that it ultimately will not get you on that path to what you're looking for, and that's really consistency. Anyone can hit home runs now and then, but what you really need is consistency, because consistency will be able to sustain your trading. And this is what was taught to me. This is what turned my trading around on the floor, and this is what my goal is to teach to all of my students and members, how to trade with the specialist edge, which is rooted in simplicity, and also it's hopefully going to be able to get you on that road to consistency. Okay, so today I'm going to teach you something extremely simple. I'm also going to share with you an entry technique, which is extremely simple, but if applied correctly, I feel it can get you on that road to consistency. Now, one thing before we begin, for those people, once again, who are new to my presentations, we will have a question and answer portion at the very end of today's class. So if you happen to have any questions, kindly wait till the very last 10 or 15 minutes. This won't be long, so we'll go over all the questions at the very end. Kindly just remember them or write them down if you have to, but in order for me to answer any questions, I have to open up our question and answer box, and I'm not going to open that up till the very end, so I won't even see any questions that you may have. The only question I'll answer at this moment is the most common question is this being recorded? Yes, it is. We record all of our presentations, and I'll give you an email address and a phone number if you want to request a link later on. Okay? All right, so thank you for waiting for the questions. Why don't we begin? And let's first talk about what you're going to learn today. All right, we're going to discuss trading with the trend. Everyone knows you're supposed to trade with the trend, but usually everyone does it correctly. So we're going to talk about what it really means to trade with the trend, and then I'm going to show you some examples of what we use at Specialist Trading, one of our great tools for trading with the trend, and how it can really apply to any market and any time frame. Then, once we know what the short-term trend is, I'm going to share with you a trend entry technique. Now, this is not a system, it's not a strategy, it doesn't come with complete rules, but it's an entry technique. It's one piece of the puzzle. And you're going to see how important this is when you apply it with the trend. So you can use this, actually you can add it to your current strategy that you're using, or you can build a strategy off this if you'd like. And then lastly, in the last minute or so, we're going to talk about a 2-for-1 attendee special. All right, so let's talk about trend. Now, everyone always knows from the minute you start trading, always trade with the trend. That's the first thing you learn, right? You got to be in sync with the trend. The trouble is there are 1,000,001 ways in which to trade with the trend. In other words, every mentor, every teacher, every educator has a different idea of what the trend is. I know a lot of people think, well, we're supposed to look at a higher time frame in order to tell what the lower time frame is doing. I know I traded that way for a while, and all that did was keep me out of good trades. I had a great setup on, let's say, a daily chart, but the weekly chart wasn't coinciding with, so I had to wait till they got in sync, and meanwhile, I missed a great trade. Or let's say a lot of people look at indicators. Well, these are good. The indicators can help, but over time, they're really lagging, and you'll miss a lot of great trades as well, and many times you'll get on the wrong side. So there are 1,000,001 ways. Everyone knows that you should trade in sync with the trend. And if everyone is trying to trade with the trend, then why aren't there more winners? It's been estimated that up to 80% of all traders lose. So obviously, they're trying to pick tops and bottoms going against the trend, or they're really not in sync with the trend at all. Well, we feel at Specialist Trading we have a great technique for trading the overall trend and the short-term trend. Today I'm going to talk about the short-term trend with you, which is just looking at the last anywhere from 15 to 30 bars, whether it's a 5-minute chart, a 15-minute chart, or a daily or a monthly chart. But we're going to be looking at the short-term trend. Now, what exactly is this? Well, it's the PET-D, or it's abbreviation for the Primo Early Trend Detector. And basically, this is a proprietary color bar algorithm. This was taught to me on the floor some 25, 30 years ago, and we had to figure it out by hand, this algorithm. It's not very difficult at all, but it's a calculation that you have to figure out by hand. And remember, 30 years ago, there were no high-speed computers or any programs, so we had to do this, and we could only figure out what the short-term trend was for daily bars on the next day, once the day closed. But now that we have high-speed computers and we have programmers, we can format this to meet our needs, so whatever time frame, whatever direction we want. So therefore, we've turned this into a color bar algorithm, and once you see a series of green bars, this tells you you're in an uptrend. All right, now this is an ideal scenario right here, but this would tell you that you're in an uptrend and you should only be looking to go long. You should never even try to short anything if the majority of bars are green. Now conversely, if you see the majority of bars red, well, the short-term trend is down. So you don't even want to think about buying anything. You just want to continue going with it. If it's going lower, you want to look for selling opportunities or selling entries, okay? Now, the beauty of the PET-D is that it tells you which direction you should be trading. Once you know which direction the market's going or whatever you're trading, you can apply any strategy to that direction. It doesn't have to be one of my techniques or strategies. It doesn't have to be anything that I teach you. But once you have the PET-D, you can trade anything as long as you're in sync with it. Now, I'm just looking at this chart here. There are a number of strategies that we could have incorporated that I teach my students that you could have gone long AA here, Alcoa. But you could also apply one of your strategies as well. And this not only works going up, it also works going down. This is a current chart of win up until I believe yesterday or the day before. As you can see, the bars continue to be red. So there's a number of opportunities in which to go short or long Alcoa in the previous chart. Remember, the only thing that you're doing wrong is if you go against it. So in this case, we would not even consider trying to pick a bottom and win. The same instance, if we looked at Alcoa once more, we don't want to even think about going short Alcoa. Now the PET-D, I have to repeat this, is not an indicator nor a strategy, but it's a unique color bar tool based on momentum It's a proprietary tool based on momentum that is designed to show you in advance when a trend has most likely begun. And this is the beauty of the PET-D, because that's why we call it the early trend detector, because it will show you many times in advance before other so-called sophisticated trend identifiers even have told you that a trend has changed. So many times you already have this advanced warning. Let's look at this older example here in Twitter. And I'm going to start off showing you some older charts, but towards the end of this presentation I'll show you charts that happened just as late and current as a couple of days ago. But this is an older chart of Twitter, and obviously looking back in hindsight, we see that we were in a downtrend. Okay, we see that we were going lower, and roughly this was this fell out of bed about 10 or 15 points. So this was something, if you were long, you probably lost a lot of money, or if you were short or thinking about going short, wouldn't it have been nice to know when you were in a full-fledged downtrend? Well, we simply add the PET-D, and we see that the colors were green right here, but right here at the very top we changed to red. Now we could have easily changed to red anywhere here according to some other methods, but we didn't until this particular day, once the algorithm said it was red, and look what happened right off the bat. Now it's risky to use this once again as a strategy or a system. It's simply identifying the trend, and the way you can use it if you want to be conservative is that you simply wait for 3 consecutive bars, as we have here, that are one particular color. So in other words, if you've been in a series of green bars, if you get a series of red bars, 3 red bars in a row, well, that's most likely telling you the trend has changed. So right up here, roughly about 41 or 40, you knew that we were most likely in a downtrend. So if you were a long Twitter, you wanted to get out, or you could start looking to go short. And look what happened. It went roughly from 41 all the way down to 30. So you could have a nice 10-point directional tool there. Now, looking on into Twitter, we see that we went sideways for a while, and we didn't know if the trend had changed yet until right here. Guess what? We have 3 green bars in a row. Now we had 2 right here, but we want to play it safe, so this didn't give us any warning until we have 3 of a different color. So that was telling you right at 34 that most likely the trend is going to change. And look what happened. Okay? This is why we call it the early trend detector. Now here's a current chart of the E-mini going all the way back to the beginning of the 2013, roughly almost 2 years ago, and we're looking at weekly charts. Now, since 2013, the E-mini has basically been going straight up, and a lot of people have lost a lot of money trying to pick tops in the market, because the E-mini just represents the S&P index, or the market on a whole. So a lot of people have lost a lot of money trying to figure out when the top's going to come in, all this terrible news happening overseas, thoughts of war or the economy, and the market continues to go higher and higher. Well, if you simply just applied the PET-D to this weekly chart, you see that we've been green the entire way up. We've had a few splashings here of red, but no more than a couple of bars. Remember, we want to have at least 3 bars telling us that we've changed the trend. And this was this snapshot was taken up until yesterday, I believe, so we still have not changed in any way, shape, or form. So you would still, over a weekly time frame, if you're trading weekly bars, you would continue to be long the market until you see 3 red bars. Now we can also use this intraday in an entirely different market. Here's the British pound. Here's a 4-hour chart, 240-minute chart. Obviously, we've been in a downtrend, but how could someone have taken advantage of this if they wanted to intraday trade the British pound on the short side? Well, you simply add the PET-D, and you see that the entire time we were red, and you could have gotten short way up here once you closed 3 consecutive red bars in a row. Okay? And look at all the gains you could have made on the way down here simply by continuing to be short the British pound. So we showed you stocks, we showed you the mini, we showed you the British pound. Now let's show you long term. Here is a monthly chart of the S&P index going all the way back roughly 20 years, back to 1994, 95. Okay, look at all the tremendous swings that the market had, all the way up here till the bubble burst here, the internet bubble burst, and we went straight down. And then we bottomed out, and we started to have a really nice rally up until 2008 and the banking and financial crisis, and we fell out of bed again. And then up until then, we've been going straight up all the way here. And this is a current chart. So how would you have liked to know when these swings were taking place in advance? At least had some type of fair warning if you were a portfolio manager or some type of person that liked to watch their portfolio longer term, and you wanted to use this as some type of market timing tool, you could have done this extremely simply by adding the PET D. All we do is add the PET D, and we see here that the entire time up until 2000, when the internet bubble burst, right at the end of 2000, before 2001, guess what? We had 3 red bars. You could have bypassed all this big crash here. And then once we had 3 more green bars, well, it was time to get back in. And look at this. The market crashed in 2008. But as early as 2007, the last 3 months of 2007, you would have had fair warning to get out of the market, and you would have missed all of this sell-off. Now it was time to get back in. 3 more green bars here at the end of 2009 or so. And we've had a couple of red bars here, but not 3 in a row, so you continue to be long. So you see how this tool is a tremendous aid in getting you in sync and being on the right side. Now granted, it is labeled the early trend detector. We use it for short term, but you see how it covers all these different bases, all these different markets. I'm going to show you one more example. We can even apply it to news. Many times it beats what the news is going to happen. Not guaranteeing you, but we see it happen over and over again. Here's an example that happened just about 3 months ago in Open. Open shares, Open Table, opened up 33 points on the Priceline announcement that it's going to be bought out. Okay, so it opened up 47% higher on Friday. Now, wouldn't you have liked to have been long, or at least been on the right side, at least not been short Open when it opened up that many points? And we look at the chart here. We see here that coming into that news announcement, nothing was really happening. Let's say you were interested in purchasing Open, but you were waiting to see some type of trend or some type of pickup in volume or just something that you've been taught that would tell you that it's about to go up higher. So you're on the sidelines and just watching it, and then when the announcement comes out on the 13th, well, guess what? You missed it. You didn't have a chance because it gapped up and it's too late. Okay? Well, not really, because if you were savvy enough to have the PET D, you would apply that here, and now you see that we were red all the way up until the mid to end portion of May, but right here at the end of May we had 3 consecutive green bars. So this was your clue that the trend had changed a full 3 weeks before the buyout announcement. And I see here once again, looking forward, we had a number of different ways you could have gotten long just in these 2 weeks here of signals that we teach at Specialist Trading. You could have made a quick 35 points on that. Okay? So we see how powerful, we see the advantages of using the PET D. Firstly, as I just shared with you, it gives you an advanced security of trading in sync with the current trend. Remember, it's not a strategy, it's not a system. This is one of the biggest problems most of my students have with it. They think, well, Steve, I love this, but where do I place my stop? Where do I exit using the PET D? Where do I enter it? The PET D is just telling you what the direction of the market is. It's telling you what the market you're trading wants to do and just inviting you to be in sync with it. It's not telling you where to buy or where to sell or where to place your stop. It's not a system or a strategy. It's simply a short-term trend directional tool. So it gives you that advantage of being in sync with the current trend. Then you can apply anything you'd like to it. Now, in the course, we teach you places on where to place your stop using the PET D. But remember, the PET D is not a system or a strategy. We just look at certain different patterns that the PET D may give you in order to place your stop. And then lastly, it supplies you with numerous entry techniques. Remember, not strategies, but entry techniques that are based on the color bars. So this is what I'm going to share with you today. I'm going to share with you an entry that we call entry technique A. It's extremely simple, and all it does is incorporate inside day bar pattern. All right, so all you're going to need is the PET D and an inside day bar pattern. Now, for those of you who don't know what an inside day is, it's simply inside days are days where the chart bar has a lower high and a higher low than that of the previous day. All right, now if that hasn't confused you, let's just look at an actual slide. Okay, this is what an inside day looks like. It's a 2-bar pattern. So what you see is the first bar has this range from top to bottom, and when we say range, once again, we're not concerned with open or close range. I know so many people for some reason think that's the range, what they've been taught lately, that I have so many students and members say, well, Steve, it opened here and closed here, so that's the range. That's just the range of the opening to close. The real range is the extreme high of the day and the extreme low. That's what the range is. So an inside day just means the extreme range in bar number 1, and then bar number 2's range is either equal to or inside of it. You see that? So most of the time, just for keeping in format here, it has a lower high or a higher low. But an inside day can also be equal to or less. Now, here's what we want to look for with this particular entry technique A. We want to look for both bars of an inside day, bar number 1 and bar number 2, to be colored green. This is your signal that quick upward momentum may continue. All right, so this is what we're looking for. And the reason why we're looking for this is because inside days are kind of like a coil. In other words, it's telling you that the market is stopping to rest or kind of wait before it continues in the same direction. But we don't always know where it's going to continue or when. So the PET D tells us that, listen, we're still in a short-term uptrend, so most likely we're going to continue higher once we break out of this coil. So this is what we're looking for. Now, sell patterns is just the same thing, but on the opposite side of the spectrum. We're looking for both bars of an inside day pattern to be colored red. This is your signal that quick downward momentum may continue. So in other words, we're coiling with this inside day pattern, but now the bars are red, so this is telling you that most likely we're going to break out to the downside. All right, so now we have the trend. It's like the trend is like the wind at our backs, and then we have a pattern for entry. Once again, though, because I know this is going to be probably the most common question I get at the end of the day, people are going to say, well, where do I get out? Where do I enter? Where do I exit? This is just an entry pattern, and you can see, and after looking and experimenting with this, see what would be the best entry for you to have. I mean, I know a lot of people will see this and automatically enter at the market. Other people will say, well, no, I want it to trade just one tick below here. Other people say, no, it has to trade one tick below here. It's up to you. Remember, this is just a piece of the puzzle, and we want you to become a part of the process. Don't want you to get in that mindset, well, where you say, well, tell me what to do. I have no idea how to make my own decisions. I want to, give you great information, but then have you become a part of the process so that it meets your needs. Okay, so let's look at some examples in stocks and ETFs using this simple technique of applying the PET D along with inside day bars. And one other thing I want to mention, I know a lot of people will say, well, I don't trade daily bars. An inside day is just referring to the actual setup. But you can see an inside day in a 5-minute chart. You can see it in a monthly chart or a weekly or even a tick chart. And I'm going to show you some examples later on. Okay, so here's an example of SNDK. Obviously, we've been going straight up in this older chart through the end of July up until August. All the bars are green, telling you that there's no way you should have ever been considering going short SNDK. We should only be looking to go long. But how do we get long? Well, we look for this inside day pattern. And look at all the opportunities the PET D and SNDK gave you to go long. You had numerous opportunities using this inside day bar pattern. Okay. How about SLV? That's the ETF on silver. Okay, silver's been heading lower up. This was at the chart going up until the end of August. All the bars continue to be red, so once again, there's no reason you should ever think about buying silver. I know a lot of people say, well, it's bottomed out. Don't even consider buying something if the bars are red. You must get 3 green bars in order to think that the trend has changed upwards. So if we're just going with the flow, going with the trend, look at all the opportunities inside day bars gave you to go short. See, trading is really simple. We are the people that make it too difficult. We make it overcomplicated by trying to make everything, perfect and know exactly where the entries are. We try to systematize everything. At Specialist Trading, we only teach strategies, and strategies are rule-based, about 75% rule-based, but we also give you about 25% left for discretion. And that discretion is, where do you want to get in? You can choose your own entry. Some people, as I said, want to get in once you have confirmation that you traded below the lowest low here, okay? Other people would say, no, I want to get in right here, shorting at the last one or right here. It's up to you. Most likely you're going to be in sync, and we want you to do your research. Go back and do research and see what works best for you or what you think has the highest odds. We don't, once again, we're not systematic, in our approach. We give you a lot of room so that you can feel comfortable, because that's ultimately what's going to give you that freedom to be consistent. ROST, once again, all of the bars are green. We're obviously in an uptrend, and so we just look for inside day pattern. Now, once again, these are all daily bars. Here's a daily bar of WIN. up until the last couple of days ago, I believe. This is what we looked at earlier. We've been going lower, and look at all the opportunities it gave us to go short. How about ZTS? Well, this chart was taken up until yesterday. This has been going straight up since August. So you don't want to buck the trend. And someone could have said, "Oh, look at, we had a gap opening and we closed lower. That's a clear signal that we've topped out." Well, all you had to do was look at the close on that day. The bar was green. All of the bars were green. There's no way we even considered going short ZTS. We just look for these inside day bar patterns, okay? And then this also works on ETFs. Here's crude oil. Here's a daily chart of crude oil, an older chart going back July and August. As we were going lower, all of a sudden we had a little pop-up, a little uptrend, and then we went lower again. While we were going lower, we had these inside day bars. We didn't have any inside bars here, so therefore we didn't go long, and it's good because we went back lower again. Now this is a daily bar chart, but you could still find this if you looked at heating oil on a weekly chart. We're looking all the way back to July on a heating oil chart where oil is making lower lows. It keeps going lower and lower. Well, you would have known as far back as July and August that you should continue to short heating oil. All right, let's look at the E-mini now. Let's look at a different time frame. We looked at daily bars. Let's look at an hourly chart. This is at the end of August. The market was going straight up as we've been seeing. All these bars are green. A lot of people have been trying to pick a top. We know that if the bars are green, we're only going to continue to buy. And look at all these areas we could have purchased going long the E-mini, just based off this simple inside day pattern. Here's another example on a 2500 tick bar chart. Okay, now we had kind of a not very powerful rise here, but the bars were green until we had 3 red here. But while we were green, we had a few examples where we could have gone long. But actually, you probably would have just broken even or probably lost a little here, but you would have recouped everything once you changed trend and went short, and look what happened when the market fell out of bed. If you look at a 15-minute chart, this is from the 16th, as we see here in the bottom. This was 9/16, or just a couple of days ago on Tuesday. On a 15-minute time frame, at the beginning of the day, the market went straight up. Okay, we're not going to try and pick a top in the market in the E-mini on a 15-minute time frame. We simply look for these inside day bars. Had you taken this first one, you could have gotten long roughly around 1980, and that's about 15 points in the first couple of hours in the day if you wanted to hold on to it. Here's a 1500 tick bar chart, and this was actually from yesterday, I believe, yesterday coming into today. And we went lower, and we had a nice rally, and then we went lower again, just to show you how many opportunities you can get trading this technique. Well, you could have used all these inside bars, I should say, to go short, all these to go long, and then all these to go short again. Remember, once again, just sharing with you an entry technique. I know a lot of you would say, well, I would have to switch and stop. Where do I place my stop? These are things we teach you in the courses. These are also things that you can use your own, your own discretion if you like. And lastly, we look at the Forex markets, just to share with you that this encompasses any market and any time frame. Here is a monthly chart of the euro-yen going up until September this month. And all the bars have been green since 2013. All right, someone looking at this would have said, boy, I just want to short the euro-yen, and if you had tried to, you would have lost a lot of money. All you had to do is simply look at these inside bar patterns on a monthly time frame, and we're just talking thousands and thousands of dollars here, because this is a monthly time frame, and trading the currency pairs, each one of these pips here is a lot of money. So we're talking thousands of dollars here, just taking the first couple of signals here. And you can use it on a daily basis. Here's the British pound once again going lower. We have 3 consecutive bars going lower, and we're all in red. So we've been having a clue since July and August that we should only be short coming into September, only be short the British pound, and look at all the chances you had to go short using this technique. You see how simple trading is if you're in sync with the trend and you have a technique that has stood the test of time or just has the odds in your favor, it has some level of consistency. I'm not going to tell you that this works 100% of the time, but you see how it has a level of consistency. I've showed you this in any time frame, in any market, and in any direction. So let's recap. We share with you once again an entry technique using the PET-D that pinpoints quick momentum moves in any direction in any time frame. But one thing you must remember, I know a lot of people say, well, I don't need the pet D because I kind of have a technique where I can figure out what the trend is. And, you know, simple enough. I just see if something's been going straight down. I just look for inside bars. It's that simple. Well, sure, that could work every once in a while, but when it doesn't work, trust me, you'll lose a lot of money. Here's an example in CRM. Now, looking at this, someone would say, well, obviously we're in a downtrend, okay? There's no way we're not in a downtrend. We've been going roughly since 45, 46, all the way down to 40. So we're in an obvious downtrend, so I'm going to look to short this. I'm looking for an inside bar, and here's one right here. Here's an inside day bar pattern. So you sell at the market, and then look what happens, okay? Now you think, what happened? I thought Steve said that you go in sync with the trend and then you use this inside day bar pattern. Well, yes, but you also need the pet D because it will protect you from time to time. If we apply the pet D, remember, since we're going short, the pet D states that both of the bars in the inside day bar pattern, that two-bar pattern, need to be red. And if we apply the pet D, we see that only one bar was red and the other was green. So what was this telling us? It was telling us that this wasn't a setup not to take the trade. So therefore, trying to apply this technique without the pet D will work sometimes, but every once in a while when it doesn't, you'll give probably all of what you just made back. So it's much better to use the pet D, and had you applied the pet D in CRM, you would have bypassed this trade and then simply waited about a week later for this setup. And you could have gone long roughly at 42, 43 and made a nice 4 or 5 points in the next week or two. So, points to remember. I can't stress this enough. Even people that are members of my course will say, well, Steve, what are the entry, exit, stop placement, and exit rules for different time frames? I said, this is not a strategy. All we shared with you was an entry technique, all right? In order to have a full-fledged strategy, you need exit targets. You need to know where you're getting out or something that's telling you when to get out. You need to have stop placement, and you need to know where you're going to place your stop even before you pull the trigger, before you enter the trade. You need to have money management. How many shares, how many lots, how many currency pairs are you going to trade? You need to know that prior based on your account size, okay? This is not in what we just shared with you. All we shared with you was a way in which to find the trend and also a way in which to enter in the trend. It was simply an entry technique. So I know now you're saying, well, okay, well, give me a strategy. I need something because what I'm using right now doesn't work. If I could just take a few minutes to offer you this 2-for-1 attendee special. This is strategy number 4, probably our most consistent strategy to date. It's a great pullback and continuation type of strategy. What it does is it uses only one indicator and it determines when price has either stalled or pulled back before it takes off again. All right? Now let me show you some of the examples, current examples of how you can apply strategy number 4 with the pet D and how you're ramping up your odds for success. These were all current signals to go long Amgen using strategy number 4 alone. All right. Now, as you can see, we have three signals here. These are all buy signals. 2 of these signals worked out very nicely. This one and then this one. But this signal did not work out well at all. In fact, the minute you would have gotten in, you would have been stopped out most likely. So, how can we ramp up our odds for success? Well, what we do is we apply the pet D. And what we want to do is once we see the pet D applied, we want to see that the day the signal was generated, that day is also colored green since it's a buy signal. If it's a sell signal, then it should be colored red. This is just giving us the validation that we are in sync with the short-term trend. So since these were all buy signals, all of these signals should have been colored green. So we apply the pet D and we see, well, this signal was colored green and look what happened. It had a nice move and this was colored green. Eventually it took off as well. But look at this signal, it was colored red. So once you had the pet D, it would have kept you out of this trade altogether. How about HAS? Well, strategy number 4 generated 2 sell signals. All right. Now, one worked out well, this one, but this one didn't work out that well. Had you gone in short to this, you most likely would have been stopped out. So, if we apply the pet D should tell us on the day the signal is generated that it should be red. Why? Because we should be going short and in sync with the short-term downtrend. So we apply the pet D, and we see that this signal, the one that worked well, was red, and that's why it worked so well. But this signal was colored green. Therefore, it's not a valid signal according to the pet D verification, so we would not have taken it, and we would have sidestepped a losing trade. Now, this also works on the industrial average ETFs and market indexes. These were 4 signals generated by strategy number 4. okay, coming into August. Now these signals worked out really nicely. These were each about 200 or 300 points in the Dow. Okay, you could have used these as a trend directional tool, telling you when to be long the market, when to be out. Now they all worked out nicely. Why? Because the PET D colored them green. And here's one last signal though that was coming into August. It was a buy signal. It should have been colored green, but it was colored red. So you would have bypassed this, and look what happened. This is where we had our last large sell-off in the market. I want to share with you a signal that happened this week. This was in the E-mini. Once again, we had a strategy number 4 buy signal. So at the end of this day or at the beginning of the next day, you could have decided to go long. Why? Because it was colored green. So for our aggressive traders, you could have gotten in this day, or you could have gotten in the next day once we traded above, or whatever you wanted to get in using our other techniques to get in lower. But as we see here, we were green here on this daily chart of the E-mini. 2 days we were red. Now one more red day and we would have changed our trend direction on a daily basis, but we had a nice upward day and we were colored green. So we decided to go long the signal, and this was taken up until about 15 minutes today at the close. Now it's not a lot of gain, but roughly each member that took this signal has anywhere from a 10 to 15 point gain right now in the E-mini futures. Now that's anywhere from $500 to $700 gain, theoretical gain, if you decided to take this trade. So once again, the PET D is a great confirmational tool as well. And that's what it works so well with strategy number 4. Strategy number 4, as you can see, has a high level of consistency with the examples I showed you. But as well, once you apply the PET D, you've also increased your odds for success tremendously. So we're offering all our attendees today this 2-for-1 special, attendee special. We're offering strategy number 4 along with the PET D. Now, once you sign up, you get instant course access. You don't have to wait for anything to be delivered to you or mailed to you. You can start using it and looking and going over the rules as early as today as you like, because everything's an online course. All right, detailed instruction, 5 videos. We teach you all the entries, all the exits, and all the stops. I know a lot of you, once again, are wondering, well, where would I place my stops based off the technique you shared today? All this is explained in the course. We give you signal alerts. We have add-ons for strategy number 4, producing those up and down arrows to tell you when a signal has been generated. And we give you the add-on for the PET D, which will automatically color your bars. Weekly video trading lessons, archives. You can go back and look at lessons to enhance your trading. And then lastly, you have access to my personal email address. You can contact me whenever you like. Now these, you see how powerful these 2 techniques are, the PET D and the strategy number 4 momentum trader, and then when you combine them, how powerful they are, how you've increased and ramped up your odds for success. Normally this costs close to $2,000 just to buy these both separately. All right, we've discounted this 25% for all the attendees today, so we're going to offer this down to $14.95 as well as with payment plans. So if you can't make the $14.95 lump sum, you can contact any one of our trading consultants and we can put together a payment plan for you so they can be up and running as early as this afternoon. But once again, this is for a limited time only, so please, if you're really interested in about taking your trading to the next level, here's the contact information for you before I go into the question and answers. All right, we've teamed up with a sister site, Pro Trader Strategies. They market and promote all of my individual courses and techniques and strategies. So you can contact their trading consultants at trading@protraderstrategies.com, or you can call us directly at area code 310-598-6677. Okay, I'm going to open up the question and answer box. So if you were waiting, I appreciate it. And let me just see here what we let's see, William is asking, what does the PET D deal with trading range markets and gaps? That's a very good question, William, or Wim. I'm not really sure how to read it, but when you are trading range markets, remember we need 3 consecutive bars of a particular color. And many times with range markets, you'll have 2 up of green and then 1 down with red, and then maybe another 2 down with red, and then up with green. So it's continually going back and forth. So it's not giving you enough time to establish any trend. Remember, just because you have 3 green bars in a row does not mean you buy at the market. It's simply telling you that, okay, most likely the trend now is going to be going up. So we now look for some type of pattern or some type of structure in order for us to go long. But if the next 3 bars are red, well, then now you change your focus and you're looking for something else. So because of the very fact that it will alter back and forth, it will keep you out of these ranges market, because you want to see that consistency. the ideal scenario is to see those long stretches of green or of red to the downside, and therefore you know you're in sync with a really strong trending market. Okay, so the beauty of the PET D is it keeps you out of these ranges a lot. As well, we have another tool, which is an overall trend identifier, and that establishes the overall trend. The PET D will establish the short-term trend, anywhere from 15 to 30 bars. Okay, so the beauty of this is that you can use these two in conjunction if you want, or you can only use one. It doesn't matter, but many times the overall trend will tell you, well, whether you should be long or short, and then you just want to verify it with the PET D. So there's a lot of different ways to use it, once again, which we explain in the course. M. Cox is saying, I came in about 10 minutes late. Did I miss something? Yes, you did. You missed a lot. But remember, we are recording all of this. So the information right there on your screen, if you are interested in getting a link to this recording, simply contact the trading consultants. You can email them or call them directly, and they'll send you a link to this, okay? But you also stated, you say, I see bars that look like upside or green bars that you are considering red, and bars showing downside days that you have as green. What is up with that? And I think there may be something wrong with your color structure, because all the bars going down in a downtrend should be red and vice versa. So I don't know what you're seeing there. We have Hemant from India. Hemant is one of our best students who trades both strategy number 4 and the PET D. And he's done very well, and as you can see there, he trades help with the PET D. He does fantastic. He didn't have much experience trading before, and he said he had a lot of educators that had tried to help him, and that I'm sure experience that many of you have gone through, nothing worked. But since he started using the PET D along with the strategy number 4, he's got his trading to be consistent, and he's purchased some other strategies from ours as well. He says, I'm using the PET D for the past 2 months in the Indian market. I trade only pullback technique. Per day I earned much money from my trading career. Great, and I want to thank him for the kind words. He says, with the help of the PET D, he would like to say one thing. The beauty of the PET D is it's very simple to learn, and it makes money consistently. Well, that's great. And he says also a new person can learn this as well. Okay. Without going too much into detail, we could all learn a lot from him, because he still works fantastically with this, and this is what we're trying to instill in each and every one of you, is that it doesn't matter if you're a hedge fund trader or someone who trades just for a couple of weeks experience, or someone who trades in a totally different market, such as Hemant, who trades the Indian markets. This will work and give you that consistency, that level of consistency. Okay, so once again, there's a lot to be gained from using the trend in our proprietary color bar technique, as well as a strategy that has a number of signals, as well as consistency. Harry asks, is the inside bar label bar part of the PET D software? No, it isn't, Harry. It's a lot of people have asked for that. It isn't part of the software. It's very simple to see, though. This is just an entry technique. If this were an actual strategy, we would be providing you with those, bars, or should say up and down arrows. But I think most of the charting software packages have scans that will show you inside days. So all you have to do is run a scan of that, and then if you have the PET D applied, you can see which direction it's most likely going. But to tell you the truth, I've been trading for so long, I see inside bars automatically. You don't really need to look at anything. Once you know that this bar number 2 should be inside the previous bar's range, or at least equal to it, they're very simple to spot. And then you just come up with your own idea, or use one of our suggestions for entry. But it's very simple and very consistent. Okay. Fitzroy is asking, what was the other indicator that worked well with the PET D? You mentioned it in a previous webinar. I'm not really sure, Fitzroy. I'm not really sure. I don't remember. I give so many webinars on a daily basis. I know that I think it may have been the strategy you were talking about, because it works tremendously with strategy number 4. It works well with all of our strategies, but it can work well with a strategy that we don't even promote or market. Let's say you have a strategy that is based off the tides of the ocean, all right? Something like that. Whenever you get a signal telling you to go long or go short based off whatever your strategy is, you could apply the PET D just to confirm it. So let's say your strategy says, okay, we got to go long IBM based off of astrology or whatever you look at. Well, just make sure that the PET D has that same bar colored green. If it is, well then go ahead. You have perfect confirmation to go along using whatever strategy you want. Same thing if you wanted to go short. So this can work with any technique, any indicator, any tool you have that you feel comfortable in using that has worked well with you in the past, but you want to ramp up your level of consistency. That's the beauty of the PET D. Okay. Let's see here. BM asks, how do you choose which currency pairs and stocks to give signals to? Well, remember, you can always run a scan. You can run a scan with the PET D or strategy number 4 or any of our strategies on which we have our platforms that we use or coincide with these particular methods. Those are TradeStation, MT4, Metastock, and NinjaTrader. So you can just run a simple scan looking for those particular, strategies or the PET D in instance with them. But they're very simple. We only track 6 of the currency pairs. So if we're looking at currency pairs, we only look at 6 currency pairs on a daily basis. We don't try to overcomplicate our trading, so it's not very difficult to look at 6 currency pairs. Okay? I hope that answers your question. Can you apply the PET D to any and all stocks and ETFs? Yes, Jack. It works virtually on anything. I showed you examples in stocks, ETFs, currency pairs, crude oil, heating oil, currency pairs, indexes. It works. And also, remember, it works as a longer-term time frame indicator if you like as well. I showed you the monthly charts. If you're a portfolio trader, you can just simply use that and tell you when to get out of your portfolio or when to be on the sidelines, go to cash. Now, you just looked at that monthly chart of the S&P index. Well, we're still long the market. You can still be long your portfolio or your indexes or whatever you are in your IRA, and then you can get out into T-bills or whatever you want in cash once you see we turn to 3 consecutive red bars. This has worked going back 20, almost 25 years. Let's see. John asks, I've been chatting with Terry Marsh. I saw this video already, and I'm very interested. Yes, well, thank you. I definitely want to watch this again until it becomes memorized. Thank you very much. I'm sure this will really fit my needs. Bravo. You're welcome, John. I look forward to working with you. If you haven't purchased this already, remember, that's also one of the things with our courses. I know a lot of people have told me that they've purchased courses through other educators, through other websites, and then once they get it, they never hear from the people again. I get tens, if not hundreds of emails on a weekly basis, and I always answer each and every person. Sometimes it takes a little bit longer because there are people ahead of you that I have to answer, but we're always in contact with people. So this is not something where we give you the information and then walk away. You're always in contact with us if you have questions, and we don't expect people to just say, well, I watched the video, I memorized it, now I know exactly what to do. We expect you to ask questions. This is the way you learn, and this is the way you become familiar with the process. We want you to ask as many questions as possible, and then once you really feel you fully understand it, then we want you to paper trade, and then ultimately slowly but surely get involved in the markets. And then you don't have to rely on us. Remember, I said at the very first opening statements, we provide information so that you don't have to rely on an outside source. In my opinion, in 37 years, that's a recipe for disaster. The reason why most traders lose is because they're taking all their signals from some trading room or chat room or some system they have or somebody on TV. I want you to generate your own signals through the information we give you that have stood the test of time. Okay, that's the way my mentors taught me, and that's what turned my trading around. So this is what I'm trying to instill in all of my students as well. Danila Moda asks, what about strategy number 1? Yes, it works with strategy number 1 as well. Remember, this can work with any strategy, one of ours or one of yours. It's just the way you use it is that when you get a setup, meaning that whatever strategy you're using tells you either to buy or to sell, it should be confirmed with a PET D. So it doesn't matter what strategy you're using. So let's say it is strategy number 1. This is a great pullback strategy that I have that I teach my students. Once strategy number 1 issues a buy signal, we should look for the first green bar, or we should look for that signal to be green. And that's our entry. All right? If it gives us a sell signal on a pullback, we want that bar to be red. And that will give us a higher degree of success. So it works really with any strategy, whether it's one of mine or one of yours. Okay? Let's see, Jason asks, anything can work or may work. However, has anyone actually used this product to successfully day trade the Russell? Well, I can't say particularly the Russell. I know I have used it on the Russell. I go in and out of trading Russell, stocks, the E-mini, but I know I have, and I've been using this technique for, gosh, 25, 30 years. I know we have people that use it virtually in other markets. I just shared with you a gentleman, Hemeth, who only trades this on the Indian markets, which I have no background at all, which I've never traded, which I've never even seen equities or issues on it. And he says he does fantastically. He's very consistent. So I think if it works on an Indian market, I don't think we'd have any trouble intraday trading the Russell. I really don't think so. So, you know, its level of consistency and what people have told us how well it works on other markets that we're not familiar with really gives you that confidence to use this technique. Dennis once again asks, how does this work in sideways markets? Well, remember, we're not going to sit here and tell you that every trade is a winner and that you make 1,000% every month. We're not going to tell you. There are some losers from time to time. I shared with you some of the losers. The beauty of the PET D when you apply this is that it will many times keep you out of these rangy markets. Why? Because it's oscillating back and forth. It's turning red, turning green, turning red, turning green. So it doesn't give you 3 to 5 consistent bars. So you don't know what trend you're in. Therefore, you can't take a trade because it's not giving you any clear signal. So that's the beauty of this. In other words, if you had some strategy that just said, well, it doesn't matter if we're rangy or if we're going straight down or straight up, you got to take the signal. This is more like a system. Well, this is not what we teach. We teach strategies which give you that leeway. And the beauty of the PET D is it will not get you into anything because it doesn't see anything. It's churning back and forth, so it's telling you there really is no trend established. Okay. Let's see. William asks, when trading the daily chart, would you consider trading it only in the direction of the next higher time frame? In the example, the weekly chart. Well, William, you know, if I'm answering that personally, I don't personally trade that way. Remember, I said I know some people look at trend that way, and they have swear by it that that's the way to trade. I personally don't trade that way because I've only seen through my experience, my personal experience, it keeps me out of good trades. In other words, I waited for the lower time frame to confirm what the upper one is doing and vice versa. And because if I'm waiting, they were never in sync, I missed a great trade. And I sat there going, why didn't I just trade the time frame I got the signal in? So that's the way I like to trade. But remember I said, this is all a part of making you a part of the decision-making process. So just because I trade that way, just because that's my decision-making process, doesn't have to be yours. There's nothing wrong with using this in the higher time frame to confirm the lower and vice versa. So there's no rules that say you can't do this. I personally don't use this in my decision-making process. If you want to, then fine. That's the right answer. That's what we teach. This is what we want our students to do at Specialist Trading. We don't want you to say, well, Steve doesn't do it, so I shouldn't. I want you to, you know, do your own research and see what makes you feel comfortable. Then if you have no problem with that, then use it. It doesn't in any way alter our philosophy. In other words, you're not bringing in 20 indicators and a totally different way of looking at the markets that we never discussed. So you're not doing anything different. So that would be fine. Okay. Let's see. I'll take a last question here from Vehan. On TradeStation, can PET-D operate on price bars that are shorter than daily bars? Yes, you can apply them to any time frame, any time frame. In fact, I used this today. I was trading a 2,000 tick bar chart in the E-mini on a long setup that I got. All right, you can, if you want to, look at a 2,000 tick bar chart on the E-mini and look at all the different setups you could have had on inside day bars, and then see if the PET-D would have been green, if you could have had a nice trade there. I traded this today and had a nice day. I made a couple $100. Most of the day I was busy putting this together, but I made a couple $100 and I got out of the market. So that's the beauty of this. You can trade it any way you want. If you want to have 1,000,000 setups, that's fine. If you want to only have trade once a week, that's okay. There's no right or wrong answer. This is not a system. You don't have to trade the same way each and every time. We're trying to give you sound information that has stood the test of time that will hopefully get your trading consistent. Okay, that's what we teach, and that's what we try to instill in all of our members. So, in closing here, if you're really serious about, you know, getting your trading to that consistent level, I strongly urge you take advantage of this low price. This really should be running closer to $3,000 or $4,000, which we've had it advertised on the website before. Because of this special deal, we've discounted it down to $14.95. And please remember, I know that may be difficult for some people to pay in one lump sum, so don't worry. You can always structure some type of payment plan with the trading consultants at Pro Trader Strategies, and you can have a small deposit in today and be up and running this afternoon and learning all the rules and applying all this to your platform. So we really make it simple. We have a great tech support system. If you have problems, we try to stay in contact with you. I know we had some problems with Hemeth, and Hemeth, I appreciate your waiting. We had problems giving him some videos, but it's different because of the time difference with us in India, as well as trying to structure, putting things together for that different market. But we try to stay on top of stuff and make sure that you're up and running as best and as fast as possible. So for that really low price, as well as putting together a 2-for-1 attendee special, as well as offering you payment plans, I really feel this is something you should take advantage of. I use this myself. I invite you to go look at the E-mini on a 2000 tick bar chart today to see if it could have worked for you as well. In closing, I want to say thank you so much for attending. We'll give you different things to work with each and every week. And I want to thank you so much for attending today. And I look forward to all of you becoming students and members of mine at Specialist Trading. I'll see you next time. Bye-bye.